Hello and welcome to today's videos. Today's video is going to be about marking up. So we're going to be marking up some charts today. So marking up is super important. You have to mark up your chart so you can understand what's happening in the market. So you need to make sure that the market makes sense to you. So right now you can see we're looking at the market. The market has a whole lot of scribbles and lines and ups and downs, and basically just looks very unreadable. So what you need to do is make sure that the market makes sense to you. It doesn't have to make sense to anybody else, but it has to make sense to yourself so that you can do a great analysis of the market and decide what direction the market's going to go in. So right now we're on TraderView. So you can see right now, this is TraderView, traderview.com. This is exactly where I like to mark up my charts. And we're at gold right now. So this is gold versus USD. We're on the 1 hour chart. We're on the candles. And then you can see that we're on the Awanas. This is pretty much the most popular chart that I like to use. So this is gold. I like gold. Me and gold have a love-hate relationship. I've made a lot of money in gold. I've also lost a lot of money in gold. So gold has its ups and downs and is near and dear to my heart. I made the most money when I first started trading in gold. So we're going to mark up gold. So I like to start, we're going to change this right now to the weekly chart. So you see we have the hour, the 2 hour, the 3 hour, the 4, the day, the week. I like to go to the week. Once we go to the week right now, let's come over here. Let's move it over. As you can see, we do have a little bit of markups from previous times. I'm going to remove all drawings. That's a right click right there. And then when you right click, you're going to bring up this chart right here. And let's see where we're at in the market. Now, I don't like to go too far back. Like you see right here, this is like March 2020. We are currently now in March of 2022. So I don't think this right here is going to have much use for us. As I see now, the market here in 2021, I like to go about a year back. That's perfectly fine when I look at the weekly chart. So this seems to be the line where I'm going to start with the market. So now I'm looking for double tops. Now, what does double tops mean? Well, you can see right here, we have a green candle, and right next to it, we have a red candle, and they're kind of even right now where they closed. And then right here, they're kind of even when it closed. So I want to draw a line of support and resistance on that. Okay, so I do have a video all about support and resistance. I'm going to mention a lot of strategies here on how I mark up. I'm not going to go into depth about that. We have those videos on our channel. So if I mention anything, you can kind of find those strategies on the channel itself. So look, this is pretty much how we're going to mark up. I'm going to look at the tool over here, right click. I'm going to use my horizontal line here, and I'm going to click right here for a starting line. So once I click right there, what I like to do is I like to make my lowest low, or the lowest part of the market that I'm looking at, a black line. That's me. That's just what I like to use. If you guys want to use any other color, you can use any color that you want. I'm going to mark the tippity top right here, a black line also too. So this is pretty much how we're squeezing the market in between these two lines also from here. So now I'm going to take the next line here, look for my next double top, go here. Now I like to use blue for this particular line. These are my weekly marks over here. I'm going to move this line down just a little bit because I like this line just a little bit better. So I want to catch as many double tops as I can, catch as many touches as I can too. Touch, 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 touch. The most touches. I don't need the market to touch every single time, but I want to get the most for my bang for my buck. Just like you see, there's a long wick over here. I'm going to move it slightly down right there. This is a good line. So it's kind of touching everything across. Anything that happens on the left is going to happen on the right typically. So if I draw my line over here, you can see it kind of intersects and goes all the way across. Now I'm going to go to my lock tool right over here. And then we're going to start clicking just a few more lines. Sorry, kind of got to click the tool that I want. And then we locked it. So I see double touches over here, double touches here, double touches here. I have some double touches over here. I have some double touches over here. Very good. Let's look up. Double touch right over there. Double touch over here. I always tell my students when I'm marking on my chart, that's the first thing we start with. I always tell everybody we don't get paid by the line. So we can use as many lines as we can. I see double touches over here, double touches over here. Now remember, this is the weekly chart, so it is going to be very far apart from each other, these lines. So they may look close together on the weekly chart, but these lines will be very far once we go to the hour chart. So now that I'm looking around, I think I have marked up every double touch, every that I see. Got a little bit right there. Let's keep looking. Do I see anything else? I do see a line there. So that looks like that's about it for me. So this is pretty marked up. Like I said, I could mark all this up, but this is going back almost 2 years ago. So I don't think that's really valuable information. If the market comes down to this area over here, I would mark it over here just to see the consistency in the market. But right now, as you can see, the market hasn't played anywhere near that. So this looks pretty good. Take a quick look. Now I'm going to change over to the hourly chart now. Now that I'm at hourly chart, I need to now extend these lines. These are my supports and my resistance. I think I just click one in. Let me take away my tool, the lock tool. So now I can move this around freely without kind of clicking everything here. So now we're going to look at the market now. Do we see any other double touches? Now you see this line here. I'm going to just move it slightly up here. Very good. Anything else we can move? Nope, looks pretty good, pretty consistent, pretty solid. Very nice. So this market is kind of frozen right now because we are marking this up on the weekend. So the market is closed. So now you see we have double touch. We have a doji over here. We have a sunset. We have a engulfing. I have a move over here. Very nice. Double tops across. We have some more sunsets over here. So now I'm going to click the bottom over here. And I'm going to make this red. Like I said, you can change this to any color that you like. I like red to let me know that this is a mark that I did for the hour. So these are hourly marks. Good, good, good. I like this over here. Let's keep looking, keep looking. Okay, I'm going to slide this line down just a little bit right there. Catch these double tops. Slide it up just a little bit. Like I said, it's very important. Try to get as much touch as you can. See how I'm missing this line over here? So I'm going to slide this just slightly down. Very good. We have some over here. Let's just move this line right here. Like I said, just trying to get as much double tops as we can. Very good. Excellent. I think this is pretty much done right now. I don't see any major lines that are missing. Like I said, we want to get the most touches here. Touch, 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 touch. The reason why is because when we set our entry points and we want to take profits, we want to see where as far as we want to go. So now once I finish doing my markup here and I did my support and my resistance, now I start adding in my rays. Let's see. We want to take a ray here from the bottom up. Okay, like I said, I have a video on the ray when it's in a bearish move. We start from the bottom and we want to come up, intersecting it. Here, we're going to move it just slightly over. Catch a little more there. See, I want to catch the closes. So let's move this right there. Move this down a little bit over here. All right, so now that to me is a very strong ray. Okay, rays coming along the bottom here and coming up. Okay, so right now we're nowhere near this ray. So the market should continuously go up. I guess I just want to make that a little bigger for you guys so you can see it better. So rays coming up, rays coming up, rays coming up. I may move this to intersect this area over here because that's more prevalent happening in the market right now. So I'm going to catch this right over there. All right, so we have the ray. Now let's mark up some consolidation zones. Okay, I like to mark up the consolidation zones also too, so I can do a ping pong strategy. One of my favorite strategies to do. You can always look forward. You can always look at the channel for the ping pong strategy. So let's look for the rectangle right here, marking up our high and low areas here. Perfect. We have a consolidation there. Let's see, we have any, yeah, there's a nice, oh, that's a beautiful consolidation zone over here. Big, long consolidation right over here for that ping pong strategy. Let's see, do we have any other consolidation zone? Consolidation basically means the market is moving sideways. So we see the market moving sideways. Any other spots? Not really. This is pretty much a good up movement. We consolidated over here. Consolidated over here. So we can actually move this line a little bit lower. So that seems to be where the bottom would be at. Nice consolidation zone. The reason why we want to mark up the consolidation zones is because if market had indecision over here, if market happens to come back around here, it may go through the same indecision. Same thing over here also too. So let's see, what else do we have? We got our array, we've got a consolidation. So we kind of, when we're marking up, we want to go over a checklist. So this is checklisting everything that's on our list, okay? So we have our consolidation zones, we have our array. Anything on the left side of this array is going to be an upward movement. So you can see right now we have a bull movement here. We have our consolidation zones over here for ping pong strategies. And now let's see what else is happening. Let's look if we can see the next thing on my list. What I like to look for is Elliott waves. So let's see if we can find an Elliott wave here. Okay, we have 1, structure 2, structure 3. That to me would be the Elliott wave right there. So let me just mark that up. So now this Elliott wave may adjust as the market is going, but as of right now, we may even start to move here. 1, 2, 3, 4, 5. No, 5 wouldn't be. Nah, I don't think that would be it. I think this would be 1, 2, and this is a huge impulse move for 3. We're going to predict 4 and 5. Okay. So that's kind of like my prediction for the Elliott wave there. This is following the rules. We have 1. So I don't like to mark the Elliott wave on the wicks. I like to always on the closes. That's what I like to do. So this is the lowest part over here. And then we have our wave going up here. This is a huge wave. So that's why I like this to be my 3, because 3 tends to always be the biggest move. Then we're going to have correction 4. Correction 4, I believe, will come around here, close to this line of support. And then we have the 5 over here. So that right there would be my Elliott wave. Let's see if we can continue that. I think this might be it too. 1, 2, 3, 4, 5, A, B, C, correction. See, now this is how we can start finding out if our Elliott wave is actually consistent. So Elliott wave theory states that everything is just lines of Elliott waves. See that? Right to 5. And then we're going to go to the ABC correction. And if the ABC correction is completed, A, B, C, guess what? We will link right into another Elliott wave, which we have right here. So you see how we're kind of marking everything up. We have our Elliott wave. We have our ping pong strategy for consolidation. We have our array. So we have our prediction of what's happening next in the market. Now, after we have that, I like to look for wedges now. Do we see any wedges that are happening here? So I'm looking around for wedges. Let's see, rising and falling wedges. Don't really see any wedges here, okay? If you guys don't understand, like I said, I have videos on rising and falling wedges. I don't see any wedges here. Nope, not so far. So since I don't see any wedges, now we're going to switch to the line chart. The line chart is for myself. I like to look for M's and W's, head and shoulders. So now we switch over to the lines. Now, oh yes, now we do see some stuff that's happening over here. Okay, I see W right over here. So let's mark some of that up. So I have a W here. Perfect. We have another W here. These are all predictions of the movement. Okay, we have a W there. Let's see, what else do we have? Do we have any more W's? I see. Let's look. Oh, we got W's here. We got some M's here. M here. We got a W here. This would be a trap W, I believe. Trap W. Oh, we got another extended W here. Yeah, these are extended W's. I'm kind of crossing my thoughts right now on extended or trap W's. Let me think for a second. Trap is, nope, yep, this is a trap. Yep, trap and trap, okay? So I was confusing right now, the trap with the M and W. So this is a head and shoulders right now. Look at the head and shoulders pattern right now. The head and shoulder standard pattern predicts what? The head and shoulders pattern predicts the movement of the market will go down. Right shoulder. Let's make that a little bigger. This is a pretty small head and shoulders. So let's just make it a little bigger right there. Yep. Clean up our head and shoulders. There we go. Now we're cleaning up our head and shoulders. Too small over there. Get the correct head and shoulders pattern. Head is here. Oh, we weren't able to close it. So shorten it up a little bit. Get the movement here. There we go. Okay. We have our head and shoulders pattern, which is kind of severely sloppy. Might be forcing this one. So head and shoulders. Yeah, it should be here to close that out. So let's fix that up a little bit. So I think I got it a little crooked. So, but either way, this is videos of trying for the entrance of time. I'm just going to mark it up pretty fast. So we're going to do our shoulder line. We're going to do our neckline. Perfect. Okay. And it's basically showing that the market is moving down, which the market did. Market moved down with the head and shoulders movement. So I kind of didn't cherry pick this. So I'm just trying to mark up whatever I can see so you guys can get an idea of how I mark up head and shoulders movement. We have our trap W, we have our M's, we have another trap W over here. Let's see, do we see any inverted head and shoulders? I don't see any inverted head and shoulders. Got another W right over here. Perfect. Now that would be an extended W right there. Let's see anything else we have. Anything? Nope. Don't see anything else. So we have our W's, we have our W's, we have our W's. Let's see, do we have any M's? Yep, we have an M, we have our W, we have our W, we have a head and shoulders pattern here. We have our Elliott wave. This is looking nice. We got another W right over here. You're gonna find W's along the whole entire thing. There's an M right over here. Trap M. It's real sloppy, but this is a trap M over here. Let's see. All right. So we got our M's, we got our head and shoulders, we've got our W's, M's, and we have our head and shoulders. Perfect. This is looking good. So now I'm going to go back to the candles right here. All right, guys. So this is pretty much how I mark up my chart. So to me, looking at this market, looking at this markup, I see my Elliott wave pattern. I believe this is going to come down and then come back up. So we're going to wait for the correction wave. Wave 3 may continue going once the market goes. So you can ride this wave. To me, this move is a little over. I would have got in around this area as soon as it broke this line of support right here. Sorry, resistance. As soon as it broke this line of resistance, this is where I would have got into this and then rode the wave up. This to me is a little late. The correction should be happening soon. And then the Johnny come latelys can get in on wave 5 right over here. I went and trade wave 4. I don't like to trade wave 4. I always like to trade wave 3 and the correction of C. All right, guys, so that's pretty much about it. This is how I like to mark up my charts. This makes sense to me. I hope you guys, I kind of clarified a little things for you guys. Anything that I mentioned, the head and shoulders, the M's and W's, the Elliott wave, and then also we didn't have any wedges here. All of those videos are on the channel also too, and I go into in-depth about the strategies about that. So once again, thank you guys for watching. I appreciate it. If you guys have any questions, put in the comments section, like, share, subscribe, and hit that notification. Thank you guys for watching. Have a great day.